Alright, over-the-counter market. Term over-the-counter market defined with a transaction that does not place within a registered stock exchange. Normally the most secure for the trade over the current counter. Term over-the-counter defines a transaction that does not take place on the registered stock exchange. Normally, most securities are traded over-the-counter, as only some 4,000 securities are traded on the stock exchange. Virtually all new issues trade over the counter, as do most bonds. Common stock of the most banks, insurance companies, small companies that would not meet with the requirements of the exchange list trade in the over-the-counter market. The over-the-counter market includes the third market, which is the over-counter trading securities listed with the exchange. For example, the market of the IBM, GM, Motors, other major companies share more made over the counter by the dealers who do not exchange. Remember, there's also a fourth market in which the large institutional clients trade directly with each other without utilizing service of the broker, which discusses the trading security exchange. We stay with the listed market and with the auction market. The over-the-counter market, on the other hand, is called the negotiated market. Here, the dealers negotiate with each other to attempt to obtain the best price that they're able to give at the moment. Major difference with listed with the over-counter trading is the listed market firms generally act only as agents for their clients. For example, the member organization receives the order to buy 10,000 shares of the General Motors for a client. The member organization sends the order to the floor of the New York Stock Exchange, where the floor member executes the trading post. When complete, the member will send the confirmation to the client, changing the commission on the transaction. The over-the-counter market firm also acts as agents. Most frequently, they act with the principal dealers as they buy or sell securities on their own account. In the function called the market making, the firm owns securities buys from sales to their clients as principal. Let us look at the agency function first. The member organization received the order to buy the 100 shares of Last Chance Saloon Corporation common stock with the market. The last chance share of the trade over the counter of the market does not market in these shares. It would execute the order as an agent for a customer. The broker is expected to make a reasonable effort to obtain the best price available. Broker might consult with the trade publication called the Pink Sheets. In the effort to execute the order, will be to discover the NASDAQ further on. Pink Sheets are published in independent companies now called Pink Sheets. They contain an alphabetical listing of the over-the-counter stocks together with the name and the telephone members of the firm which have an interest of the trading of the shares. Security exchange requires that the list and the Pink Sheets of the shares must have been issued under the effect of the registration statement, and the company must be current required reports to the commission. The Pink Sheets are published as also publish yellow sheets with list bonds trading in the over-the-counter market. When brokerage firm clerks are responsible for executing order to buy 100 Last Chance Saloon Corp. Opens Pink Sheets, she might see the following. Alright, the daily pricing of the Pink Sheet that now electronically transmitted exhibited on previous page. Our browser clerk will now make reasonable effort to obtain best price of phoning some or all the dealers. Let's assume the quotes on the shares sheets are accurate. Our broker wants to buy best offer of the Allen Company at 30.5. The best bid of the Goldman Sachs is 30.25. Best bid, best offer is called the inside market. An example of the inside market at 30.25, 30.5. Our broker would buy 100 shares at 30.5 for Allen Company and would confirm the client at the price, adding a fair, reasonable commission. Let's say $50 on the confirmation. The broker would have discussed the acted as the agent transaction. The NASDAQ. In recent years, the job dealing with the over-the-counter has been simplified through the development of the NASDAQ, National Association of Dealers Automated Quotation. The system allows the obtainment of quotation of the over-the-counter securities automated system, and eliminates far more cumbersome approach to the Pink Sheets. National Association Security Dealers Automated Quotation Services provide 3 levels. Level 1, Level 2, and Level 3. Before discussing the level, look at the requirements and listing of the NASDAQ to be eligible. Company must currently be reporting the security exchange. There must be a minimum of the four market makers, that is, for the dealers to maintain two-sided bid offering market. Must be 300,000 shares publicly held. The company must have an asset of $4 million or more. The issuer must have a capital asset of $200 million or more, and the minimum price of $3 per share. The NASDAQ Level 1 service provides for the inside market with the security best bid for the best offer to the moment is shown with the issue of the registered representative, enables them to provide current information to their clients. Level 2 provides quotation all market makers in a particular security. Over-the-counter order clerk who executes the firm agency would use level 2 service provider, seeing all the quotes, can identify bids, offerings, negotiate only with those of the market makers. Level 3 shows all markets and security, but also uses user into input information. The trader of the firm who reasonably from making market in securities as a principal would use level 3. He can enter quotation, change his existing prices instantaneously, allowing his firm bids offer to remain competitive. Quotations of the over-the-counter market are 3 general types. A firm quote is one over the dealers which must be prepared to trade. If the dealer responds to a request quoting in 19.5, the firm says a solid quote. Dealer must buy or sell a minimum of 100 shares at those prices. Also, quotation on the NASDAQ must be a firm quotation. A subject quote is one with the subject of the confirmation. Perhaps the dealer in New York City is making the market of the firm interested in the stock of the officer in Chicago. When asked for the quote of the New York person, may respond with it by saying 19.5. Subject remaining is not prepared and trade at the moment that he would first want to check Chicago. A workout quote is approximate quote. Perhaps the security trades infrequently. Dealers is not certain of the exact level that he might quote the stock at 20 to 22 workout, meaning that there's the approximate area where he feels the might work firm quotation. When identifying subject or workout quote, the dealer is not required to buy or sell at a stated price. Over-the-counter trade and markup and markdowns. Let's return to the client who wished 100 share of the last chance saloon. In the early example, the order was given the broker, executed the acting agent. Let us now suppose the order is an Allen and Company market maker, and the security Allen and Company was also the principal in the trade. It will sell shares directly to the client from its own inventory. Allen's quote on the stock is 30 and 30.5, but the wholesale quotation for the dealers only. Allen is not required to sell the stock at 30.5, but entitled to what is known as a markup. The markup is the base for the current offering price, not the dealer cost. Markups are not synonymous with profits. Dealers who have the profit in the trade that in more or less than markup may in fact show the loss of position. Amount of markup is based on standard responsibleness as well. In the case of commission agency trades, the dealer looks at the condition involved in the trade, such as availability of security. Activity stock carry a less markup than the active ones. Price of security, the higher the price, the smaller percentage of the markup. Type of the security, bonds due to the higher price, generally with a small markup of their stock. Service to the client, the firm provided some extraordinary service, the markup can no longer be usual. Or the National Association of Security Dealers does have a 5% guideline policy which covers the compensation markup. It does not say that the dealer can charge commission marking up to 5%. This would normally be too high or would be deemed unreasonable. The guide says the markup of the commission excess of 5% would be normally deemed unreasonable on their face. It is the factor in this as well, but the trade mentioned above determined as responsible. Perhaps reasonable markup of the trade last chance saloon would be 3/4 per share through 75 cents per share, with approximately 2.5% or 75% markup divided by 30.5 offering price. Allen and Company should be added to the amount offering price of 30.5. Would confirm the trade as a client at 30.25. Or $3,125 would state with the confirmation that acted the principal of the transaction. For example, the client buying through our stock acting as an agent paid a total of $3,100 at 30.5 plus 50-cent commission, which total cost for the purchase for Allen Company would be $31,125, 30.5 plus 75 cents markup in real world, 3/4 of a point markup. Principal, generally not in the case. The client must obtain a better price for the firm acting as a principal. The example uses to show that could happen and is still unreasonable as a price of the fair and reasonable, still not best price. In an example, use markup customer selling stock of the dealer with the principal of the dealer mark down the price of the wholesale bid by a reasonable amount when dealing with the customer. The standards of the markdowns are the same as for markdown ups. There are two situations dealers expected to charge less than normal markup or markdown. Proceed transaction. Client sells security for the dealer agent and reinvests the proceeds of the item in the dealer's inventory. For example, registered representative call of the client suggests that she pays a $100 share for the last chance. Registered representative firm makes market in the security. The client agrees to end with the idea, but she has no cash available. She instructs the registered agent representative to sell 100 shares of XYZ stock to use the proceeds to purchase the last chance stock on the sale of XYZ. The dealer charges a commission of a half a point or $50 from the allowable markup on the purchase of the last chance at 3/4 and a point. The dealer must subtract the commission received on the sale of the XYZ at a half a point, marking up the difference a quarter a point. Remembering that using allowable the markups you find in your career, the actual markup of the markdowns are usually less than what allowable the National Association of Security Dealer Regulations due to competitive nature of the industry. Rascal simultaneously transactions. Rascal or simultaneous transaction is one of which the dealer had ordered before taking the position. Using original example, suppose the customer gave it an order to buy 100 shares of the last chance to a broker, but instructed them to report the trade at a net no commission price. As a broker does not make a market in the shares, they might buy 100 shares of Allen Company at 30.5 for a broker's firm account. They would mark the price of the confirm the client at net price. As our broker had no risk marketing market, they now permitted to mark up as high as the market maker. Allen Company and Blair and Company is permitted to make up equivalent allowable commission of a half a point, not the amount allowed on the market at 3/4. Interposting. This is an illegal practice over-the-counter market, introducing a dealer with a trade unnecessary for the customer expense. For example, the customer dealer A entered the order to buy 100 shares of the Glittering Gold Corporation stock market. The order clerk of the dealer A checks the situation, finds he can buy a stock at 41.5 from the market maker. Dealer B instead executed the order in this manner. The clerk calls the friend dealer C, who does not make a market in the stock, and tells him that he needs 100 shares. Dealer C buys 100 shares from dealer B at 41.5. His own account, the seller of the, and then from his own account, and then sells dealer A 41.75. The customer dealer A pays 41.75 plus commission, when she would have paid only 41.5 plus commission had order been executed properly. Of course, clerk dealer A meets his friend dealer C, and they divide up the $25 the dealer C made by interpose in the trade. Since advent the NASDAQ quotation, National Association of Dealers automated quotation interposition has easier direct, has become less frequent and possible violation occurs still exists. It would not be interposting if the dealer used others to assist him with an order means of helping the client. For example, the client wishes to buy 100,000 shares of over-the-counter stock. The dealer executing the order might use the other firms to assist his accumulating large blocks so that the true side of the order does not become known. This knowledge would cause the market maker to raise offering prices, result in client paying a higher price. Chapter 7, Investment Companies.